Everyone, this is Sean with McGrover Funding Corporation, and today we're going to talk about what you need to prepare for your loan officer or your bank when applying for a loan. Now, depending on if you're doing a purchase or refinance, there's certain things that you're going to get to your lender or your broker so they can get you qualified and approved for your loan. So I'm going to write on the board the differences between the two. All right, so the first we're going to start with purchases. What would you need to get to your lender or your broker to get them started on a loan? So the first thing you're going to need on a purchase is your 2 years tax returns. In addition to that, you're going to need 30 days pay stubs, and lastly, you're going to need a couple to 3 months of bank statements. So we'll just do 2 months bank statements. Actually, let's do 3 months bank statements. So the reason we need this information, one, on a purchase, we have to verify that your debt compared to your income will qualify for the purchase of the property that you want to buy. Secondly, we ask for 3 months bank statements because we've got to know you have the down payment, whether it's an FHA 3.5% down or you're doing a conventional loan with 20% down. We want to verify that you have those assets already in the bank. And what the lender is looking for is 2 things: source and seasoning. So on a bank statement, source means where is that money coming from, and in this case it's your bank accounts. But then they're going to season it. They want to know how long you've had it in that bank account. Typically, they're looking for 2 to 3 months of seasoning on that money that you have in there for your down payment. In regards to the tax returns and the pay stubs, we're going to look at your current income, and we're also going to compare it to your last 2 years' income to see the trend in your income over the past 2 years. So, for example, let's say 2 years ago, your income was $65,000, and a year later you did $75,000. But currently, let's say we're in the month of June, and you're only at $30,000 right now. So we have to figure out how you're going to make up that other $45,000 in the second half of the year to satisfy the trend in your income, because it might be going down. It may go up because you have commission income or bonuses or something like that, or it just may be going sideways. So we have to analyze all this information when we're determining a loan for a purchase. So those are the things we're going to get from you, the borrower. But in addition to this, we're going to look for a purchase contract, and if you have a purchase contract already, you'll probably have to put down a deposit on that contract to secure that home. That's an escrow deposit. So we're gonna ask for an escrow deposit. All right. So that's what we look for when we're qualifying a borrower for a purchase. All right. So now on the refinance, we're going to do the top 3: 2 years tax returns, 30 days pay stubs, and 3 months bank statements. But on these 2, this is only for purchases, what we have here. You're only going to see that on purchases. But on the refinance, because you already own the home, the lender is going to ask you for specific things in addition to these 3 things. This is for qualifying on the loan. In addition to that, the lender or your broker is going to ask for a mortgage statement to see that you're current on your loan, you're not in arrears, and we're going to determine, based on that mortgage statement, on the refinance, are you going to have a better mortgage statement after we're done with the loan? And again, that goes with interest rates and the amount of loan and stuff that you need. In addition to the mortgage statement, we're going to ask for homeowners insurance. We're going to need this homeowners insurance on the refinance of your property. We've got to make sure you have insurance in place. If you don't, then we have to go out and get a insurance binder to help you with this refinance. Usually if a property owner doesn't have homeowner's insurance on it, it's just because the home is paid off and the property owner doesn't have to carry that homeowner's insurance. It's only when there's a mortgage on the property, most likely, that there's going to be homeowner insurance. And lastly, in addition to the 3 things for financials, the mortgage statement and the homeowner's insurance, we also need a title insurance policy. So it's title insurance. And on the title insurance policy, there's actually 2 schedules in that insurance policy. Schedule A and Schedule B. We're going to need a copy of both of those. The reason we ask for this is quite possibly you're going to get a credit when you're refinancing because you've already paid for a title insurance policy already. So if you submit that, we don't have to go all the way back throughout the whole history of that house transactions of buyers and sellers. We only have to take from the time you bought the home to present day. And that's going to save you money on that title insurance policy. So if you're looking to purchase or refinance a home, these are the items you will want to prepare prior to talking to that lender or that mortgage broker. I thank you for your time today. My name is Sean. I'm with McGrover Funding Corporation. You can reach out to us on www.mcgroverfunding.com, and you can actually apply online with us to do a purchase or a refinance. So, take a moment, go check out the website. If you're watching this on any of the social medias, give us a thumbs up, give us a happy face, give us a heart. We really appreciate it, and we know you're watching. Thank you so much.